Yes,
Okay. How was the day? Nice. Please, can you mute yourself, please? Hello. So I have two topics to teach today. I don't know how we're going to do it. Maybe I will do moving average. I'll do moving average. Hear me?
Yes, I can hear you. I muted everyone except you. Well, they're making
Okay.
noise. They're making noise.
Okay. So I have two topics to treat today, but I don't know how we're going to do it. I don't know. Maybe I'll be a bit fast today.
It's fine.
So first
we are recording.
First thing that we're going to do is moving averages. Maybe later on or tomorrow evening, or I don't know if we normally have class on Sunday. I don't know.
No, we don't have on Sunday.
Okay, don't have classes on Sunday.
No.
Okay, maybe let me just do moving average today. Maybe on Monday we'll just do how to create trading plan. After that, my time will be up. You know. So hope you guys have been studying.
Yes, sir.
I hope you guys have been studying. Or do you just come to class without studying? At the end of the day, you go. Please,
No,
if you don't practice TA, you will have a problem. If you don't practice TA, there is no way you will know it. So you have to practice, put in the work. So today we are going to talk about moving averages. You know, moving average, the last time we did Fibonacci. Fibonacci is an important technical analysis tool. You understand? That is being used to track retracements in an uptrend or downtrend. And Fibonacci tools, as a Fibonacci tool is made up of numbers which are called PRZ zones. PRZ, that's price reversal zones. So, and we have key price reversal zones. The most important I look out for is 61.8. We have 61.8, we have 32.2, 38.2, we have 78.6. You understand? But the key one that I know that whenever price touches, price will reverse is 61.8. But sometimes price can make 50% retracements. You know, price can touch 50% and reverse also, but 61% is the key. And their movement is quite different. Price tends to move faster when it touches what? At 8.2. The movement is always aggressive when it touches what? At 8.2. So as a trader, what we normally look out for is what? The best market to trend is what? To trade is what? Trending market. Trending market is just the best. It's just the best because any tool that you use in doing what? In doing your analysis in price action, always point at trends. You understand? They don't point at choppy or ranging markets. If you can't use Fibonacci on a ranging market, never. You can't use Fibonacci on choppy markets. Likewise, moving average, you can't use it on a choppy market. You can't use it on a ranging market. So the best place to utilize these tools is trending markets. Whether market is trending up or is trending down, Today we are going to talk about what moving average as another important technical analysis tool. There are so many technical analysis tools that we use as a price action trader. The reason why most people don't use indicator is because they lag so much. Indicator lags so much. You understand? It lags so much. What I can see as a price action trader, maybe with my naked eye, it will take time for indicator to interpret what price action, to give you a price action signal that or whether buy or sell. It will take time for an indicator to do that. But me as a price action trader that I trade with my naked eye, I've already seen how price is going, the direction that price is going. Price has already given me buy signal based on my based on my candlestick confirmation, based on my chart patterns. Price has already given me a clear direction that okay, this will buy or this will sell. I will now make swift decision. Indicator will keep on lagging, time to lag signal. So that's why most people don't use indicator at all. And some people that you ask moving average, they will tell you that they don't know what it is. They don't know what it means. And they are still profitable. The people that you ask now, okay, about RSI, they will tell you they don't know it, but they're profitable traders. The people that will ask Bollinger Bands, they will tell you, I don't know what Bollinger Bands means. You understand? Not that they don't trade, not that they are not good technical analysis traders. They are very good, but they don't use all those tools. Like me now, I don't know what Bollinger Band means. I've not used Bollinger Band before. I've not used RSI before. So what I normally use is Fibonacci to catch retracement. Sometimes I place my moving averages, on my chart. Like this chart now, I don't have any moving average on it. So, but there are as a trader, you must not know everything, because too much of all this now will confuse you. You will not know the particular one that maybe that will give you good strategy. But support and resistance is very important. Trend lines, knowing your market structure is very, very important. Knowing your zones, key supply and demand zones, very, very important. And knowing your chart patterns and candlestick confirmations. If you know all these things, you are good to go. You are good to go. I know people that make money using only support and resistance. They identify the key supports and wait for price action. Wait for a confirmation, a candle confirmation or chart pattern confirmation. You understand? So I don't want a situation whereby for now you lay more emphasis on indicators. Don't lay your emphasis on indicators for now. This is an advice. Don't lay your emphasis on indicators for now. Try and know other key important ones like support and resistance, knowing your trend lines, knowing your candle confirmation, candlesticks patterns, the ones that are bullish, the ones that are bearish. You know all these things. You know your chart patterns. either continuation pattern or reversal patterns. So know all these ones first before venturing into moving indicators, please. Because if you start using indicators now, you will get into trouble. You will get into trouble. But just have a knowledge of it. Have a knowledge of it. Then you can now be trying it small to see how it is. If you are not comfortable with it, you leave it. So today we are going to talk about moving average. Hope you have your paper and your pen close to you to make notes. Hello?
Yes, sir.
Yes,
Yes, sir.
I'm getting my pen and paper now.
We're right here, sir.
This market is still going down. What is the problem?
Shout to my state.
What is the problem, bro?
This market is still going down. Anyway, it's one of those things. Market cannot go up forever. So today we are going to discuss about moving averages. The moving average is a simple technical tool that smooths that smooths out price data by creating a constantly updated average price. Moving average is a simple technical tool that smooths out price data by creating a constantly updated average price. That's the definition of moving average. Simple technical analysis tool that smooths out price data by creating a constantly updated average price. The average is taken over a specific period of time. The average is taken over a specific period of time, like 10 days, 20 minutes, 30 weeks, or any other time period, or any time period that the trader chooses, or any other time period the trader chooses. Are you with me? Hello?
Yes, sir.
Are you with me?
Yes, sir. Listening.
Am I too fast?
Not ready. You're not doing that.
Am I too fast?
I'm not ready, bro. We're listening.
Okay. So there are advantages to using the moving average in your trading. There are advantages to using a moving average in your trading, as well as options on what type of moving average to use. There are advantages to a moving average in your trading, as well as options on what type of moving average to use. Moving average strategies are also popular and can be tailored to any time frame. So what this means is that moving average is a strategy on its own. You understand? It's a strategy on its own. Some people trade, the only thing that they believe that gives them signal is moving average. So they can call it, some people call it moving average is their own strategy. That's the only thing they trade with. If moving average is not giving them buy signal, they will not buy. If the moving average is not giving them sell signal, they will not sell. You understand? So moving average strategies are also popular and can be tailored to any time frame. You can use moving average to any time frame of your choice. Depending on the type of trader that you are, you know. So moving average can be tailored to any time frame, suiting both long-term investors or short-term traders. So that's what I mean by any time frame. You know, as a scalper, you have your own time frame that you normally use. As a day trader, you have your own words time frame that you normally use. As a swing trader, you have your own time frame that you normally use. As a position trader, you have your own time frame that you normally use. But moving average works in all time. So the is what? The key point is a moving average is a widely used technical indicator. It's a widely used technical indicator that smooths out price. That smooths out price trends by filtering out the noises from what? Random short-term price fluctuations. So moving average smooths out what? Trend. It filters the noise from short-term what? Price fluctuations. That's key point number one. Key point, moving average can be constructed in several different ways and employ number of days for the averaging interval. Moving average can be constructed in several different ways and employ different numbers of days for the averaging interval. You know, in moving average, we have different numbers, just like we have numbers on what is it called, Fibonacci. You understand? We also have numbers on what? On moving average. Numbers like 20 moving average, 10-day moving average, 21 moving average, or 21 EMA. We have 100-day moving average. We have 50-day moving average. We have what? 200-day moving average. So those are the moving average numbers. The most common, that's the third key point, is the most common application of moving averages are to identify trend direction. Note that word. The most common application of moving averages are to identify trend direction and to determine support and resistance. You see why we keep hammering that as a trader, you always what? Identify your trend, know your market structure. If you don't know your market structure, you will not know when market is buying. How do you know when market is extremely bullish or when market is actually trending? How do you know that? How do you know when market is bearish, extremely bearish? If you don't know your market structure, you will not know when market is bullish and when market is bearish. You will not know. You understand? So you see that moving average still aligns with what? Trend direction. You understand? It helps you to identify what? Trend direction. Just like Fibonacci. Fibonacci also pointed out what? Trend, and support and resistance. So moving average also helps what? To identify what? Trend direction and to determine support and resistance levels. Are you with me, guys?
Yes, sir.
So we are just giving full explanation before we jump into our words, into our chart. Then I will now show you how it works, how to use moving average, how to set moving average. So be paying attention and be jotting down some things. So the point number 3 is that the most common application of moving average is are to identify trend direction, or you can say moving average also helps in identifying what? Trend direction, and to determine support and resistance. Then the fourth one is what? When price crosses over. When price crosses over their moving averages, it may generate a trading signal for technical and we have what we call what? Moving average crosses. When 10-day moving average or 100-day moving average crosses over 200 moving average, it creates what? Buy or trading signal. Mind you that we don't use one particular let's say now you are using trade moving average, and moving average gives you a trading signal, neglecting other confluence. What I mean by other confluence is that neglecting support and resistance, neglecting your zone. The moving average will just all of a sudden give you buy signal. You don't look at candlestick confirmation, whether the buyers are in or the sellers are in. You just jump in. No, we don't trade like that. We will bring all this confluence together. Then what will now give you what? A solid confirmation is your candle. Is your candle. Whenever you see a bearish, let's say bullish engulfing at the end of what? A trend or continuation, yes, buyers are in this market. Likewise, what? Bearish engulfing or pin bar or hammer or your shooting star, all those candle, candle names. Then the fifth one is what? Why moving averages are useful enough on their own. They also form the basis for other technical indicators, such as moving average convergence divergence. That's MACD. MACD, because we also have another type of moving average called MACD. Are you with me?
Can you
Please
repeat?
repeat.
Can you repeat number 5?
Okay, number 5. Why moving averages are useful enough on their own. They also form the basis for other technical indicators, such as MACD, that's MACD. MACD, which is moving average convergence divergence.
Okay.
Yeah, that one is another technical indicator.
Okay. Got it.
Okay. Then, why use a moving average? Why do we use moving average? Why use a moving average? A moving average helps cut down what? The amount of noise on a price chart. So they help to what? To cut down noise on a price chart. For example, when you look at the direction of what? Or get a basic idea of which the price is moving, whether it is going up or it is going down. You understand? So moving average helps to point out what? To point out how price is going and to filter noise from what? From charts. So we don't use moving average on sideways market, so please. Most of these indicators, they will not give you signal on let's say in a ranging market, they will not give you signal. So another thing is that a moving average can also act as well support or resistance. where you can get all this in is, let's say in an uptrend, a 50-day moving average, a 100-day or 200-day moving average may act as what? A support level. A moving average can also help as support or resistance. In an uptrend, a 50-day, 100-day, or 200-day moving average may act as support level. This is because the average acts like floor or acts like a floor, which is support. So the price bounces up of, or bounces off it, or something like that, bounces off it. So price will be, as the trend is going up, the moving average, let's say the 50-day, 100-day, 200-day moving average may act as what? As a support. So price will be respecting what? All those touches, all those areas, the floor. Why in a downtrend, a moving average may act as a resistance. In a downtrend, a moving average may act as a resistance. Are you with me?
Yes, yes.
Hello?
Yeah.
Okay. Then we have types of moving average. We have simple moving average, SMA, and we have exponential moving average, EMA. Simple moving average, SMA, and exponential moving average. Whichever one that you use, it's still the same thing. Exponential moving average is very difficult to calculate. If you want to calculate it, it's very difficult. The two is very, very, they are good. You know, they follow up trends, as in they follow trends very, very well, moving average. So let's go to moving average length. Moving average length. We have two types of what? Moving average. You can use a moving average, simple moving average, or exponential moving average. When you see 20 EMA, that means it's 20 exponential moving average. When you see 20 MA, that means the simple what? Moving average. So moving average lengths. Common moving average lengths are 10, 20, 50, 100, and 200. Common moving average lengths are 10, 20, 50, 100, 200, etc. These lengths can be applied to any chart time frame. You can apply moving average on a daily. You can as well apply moving average on the week. You can apply moving average on your H4, or your H1, M5, M15, M30. Depending on the trader. Hello? Hello?
Yes, yes.
Okay. So moving average can be applied to any chart time frame, depending on the type of trader that you are. So a moving average with a short time frame. A moving average with a short time frame will react much quicker to price changes than a moving average with a long period, a long time frame. So among all these things now, like 20 moving average benefit what short-term traders so much because it follows price closely, produces less lag time. You understand? So moving average helps what short-term traders. What I mean by short-term traders are day traders, scalpers. You understand? Because it follows what price more closely and therefore produces less lag. What I mean by lag is what? Lag is the time. Is the time it takes for a moving average to signal a potential reversal. A 100-day moving average may be more beneficial to a longer term traders. So if you are a swing trader, or position trader, you make use of what? 100-day. You play day on your what? Day moving average. That's if you are a longer term trader. But if you are a scalper or day trader, using 20-day moving average will be helpful for you. Maybe 20 moving average, 50 moving average, 8 moving average. Are you with me, guys?
Yes.
Yeah, someone is with you, sir.
Okay.
Oh, so check.
So now we've talked about the lengths, moving average lengths, which are what? What are the lengths of moving average in terms of number?
10, 20, 50, 100, 200 PTC.
Yeah. Yeah. So I said lag. What lag means is maybe you can put meaning of lag. Lag time it takes for a moving average or for indicator or for any indicator to signal a potential reversal. What this means is that me now or you as a price action trader, you understand?
Mm-hmm.
You are trading with what? You are trading with your naked eye. Like this now, having seen this FTM chart, I've already known where price is going. You understand? As a price action trader.
Yes, yeah.
But indicator, whenever price approaches what? An end of a trend. You understand? Maybe trying to reverse from what? From uptrend to a downtrend. It will take time for indicator to adjust and produce what? A buy or sell signal from that reversal. But you as a price action, you've already seen all these things that, okay, price now, like this bullish candle here, that price was trending up, and gets to this place and rejected. Buyers, now you can see that this candle is not healthy enough for the buyer. It's not a healthy candle because price formed what? A large wick. Look at it here now. Formed the weak rejection. Showing that what? Buyers are getting exhausted. Are you following?
Yes.
Yes.
Then here now, they tried again the second time and failed. You understand? So price now closed with an indecision candle, which is doji. You understand? They tried to buy. Before you know it, it failed. So they were kind of struggling. This candle now indicates what? That buyers and sellers struggled here until they formed what? An indecision. Then the that popped up was what? Bearish. Buyers tried also to buy, but they failed again the third time. Before now, sellers now took over. Market became what? Kind of ranging, moving sideways here. All this candle, because we had what? Buyers and sellers in the what? In the market. So it happened to sellers now came in again. You know, they came in again. And this candle now what? Confirmed that true, the sellers are in because it closed with what? Engulfing. The red candle engulfed the green candle. Before now what? Sellers started selling. So right now, FTM trend has changed from being bullish. From being bullish now it's heading bearish. But this bear market is just a short-term market, short-term bear market. You understand? It's just a short-term bear market. It's not a long, all those long period of bear market. This one is just a short-term. So who can tell me the type of reversal that was created here? Who can tell me?
That's double top.
Thank you. This is a double top. This is a double top. Here is our neckline. You understand? Here is our neckline. Price broke above below this place. Here is what? Here is our, what is it called again? Retest. Yeah. So it dropped, buyers entered again, you know, having touched the support area. Are you following? So price, my buyers entered again, tried to buy before sellers got to what? Just be, I don't know if you see how or notice how I analyze these things. Guys.
Yes.
Yeah.
Are you seeing how I interpret all these things?
Yes, of course.
My candles very, very well because I'm used to it. I've known how the market is playing. On seeing this now, I've known what is happening. You understand? So price reversed from this place. This is our resistance. This is support. This is our support. So price respected these areas and did what? Started buying again. Now it got to this point here. You can see weeks rejections. It got to this point again that what? Buyers now saw this place as a stumbling block for them to break. And this price broke above this particular support. This is a support. Now here is a resistance. And the price broke this place. FTM will go to what? $4 and above. But they failed. Buyers failed to what? To pass this particular area. You understand? Before now, sellers came in again. But and seeing it at what? FTM, buyers will try again for the second time to see if they will break this place. So that's why I said it's a short-term what? It's a short-term sell market. So if you are holding your FTM, please don't liquidate your FTM. Oh. You hear me? So let's just place moving average on this chart. So what we are going to use now, having been on the daily, we are going to place 100 moving average and 200 moving average. Then let's find our indicator. You see this one here, like X.
Mm-hmm.
This is where you pick your indicator.
Okay.
It's not coming up. Oh. No, it's not there. Let me look for it. Please come. Where is this indicator now?
Yeah, how are you?
My indicator is not coming up. Oh. See, it's not coming up. Look at you. I don't know what is wrong with this thing. Oh. Hello.
Yeah, we're here.
My moving average is mid. Okay. There is moving average here now. Okay, it's like I've placed moving average on this chart before. Okay. Let me just change. Why this thing is behaving like this now? Let me remove them. Let me just remove them and try again. Okay. Now, have you seen where to get the moving average? It's working now.
Yeah.
Just come to this F sign with X. You see indicator and strategies. Hello.
Yes.
So just come to indicator and strategies. You clicked on it. You click on it. So you come here, search moving averages. Yeah?
Mm-hmm.
You search moving average. You can see moving average here.
Yes.
You add your moving average. The first one, you can add it like as a free what is it called? Trading view. You are allowed to use at least 3 moving average. So let me add another one. I've added what? I've added 2. So I will now come here. You can see the settings. We have to set it. Are you seeing settings on my screen?
Yes.
Then you come here and impute what? Let's impute 100 moving average. So you come here, put the style. Let me put the color. Let me select the color red, so I can be able to differentiate it. Let me tick it. So this is our 100 moving average. Then let's go and change this one again. Inputs. Let's make this one our 200 because we are on higher time frame. Then color. Let's make this one thick blue. So now we have what? We have our moving average. This is 100 moving average. So you can see that what? The 100-day moving average is lower than what? Than the 200 moving average. You understand? From here so far, we said that the shorter term traders, we said what? The shorter the moving average, the shorter the more, how will you call, benefits it is to our what? To our price signal. Like you see this red line now, this red moving average is on the resistant what level here. Are you seeing it? Hello?
Yes.
Yes, sir.
Are you seeing that what? This thing now aligns with what? This area.
Yes.
So it's waiting for price to touch here.
Mm.
You understand? So this place now is our support area. This red line now is our support. You can see that it's aligning on what? On this previous resistance. Are you following? I told you guys that what? This thing is a short-term what? Sell. It's a short-term sell. Having this area, I've drawn this area before putting this indicator, before putting this what is it called? Moving average, isn't it? Hello.
Mm-hmm. Yes.
I drew this level before putting my moving average. So you can see that what? Price aligns with this area. Are you following? So price now, price is pushing down. Price touches this area. What will happen? It will bounce off again. It will do what? It will bounce off again. You understand? So there's a statement I made here that price will bounce off. Where did I write that himself? Who can read that statement for me?
Which number? Which number? Which one?
It's not number.
No number. What does the statement say?
I'm looking for where it said that price will bounce off.
Price will bounce. I don't know what.
22 seconds.
Let's continue. Let's continue. I can't find where I wrote that in again. So immediately price touches this area, what will happen? You will see a sharp reaction here. You see a sharp reaction. Definitely, FTM will still come down. FTM will still come down and respect and touch this area. You see these wicks here. These wicks on the left side. FTM will come back and test it. So FTM is going to 1.8 ish. So you see, it will respect what this 100 moving average. These crosses that you are seeing here now, I'm here to give you a crossover. This place is a crossover. This place is a crossover. You can see that the red line crosses over the blue line. The red line is the lower term what? Lower term moving average. It crosses what? It crosses the blue line, which gives us what? Which gives us a strong bullish what? Move. Hello.
Yes.
Are you following, guys? Talk to me. If you are not getting me, talk to me. I will go back.
Seriously, I'm not getting this.
You are not getting it.
Seriously.
Okay, but did you get how I navigate, as in how I inserted this what is it called? Moving average. Did you get those areas?
Moving average, yes.
You come to this FX here, and it depends on what? It depends on your type of trader. Here now, the reason why I chose this daily, because I want to do what? I want to position my trade. Maybe I want to hold my trade for like months. You understand? So that's the reason why I used what? I use 100 and 200 moving average. You understand? So I colored this 100 moving average red. You can see it here that is showing red here.
Yeah.
It's showing red. Why the 200 moving average is the blue one? So I said FTM price what? Was going up like this. You understand? I'm here to give you the crossover, which happens here. Crossover happened here. You understand? So I'm just giving you how it works. I said that what? We use moving average to do what? To support what? To identify trend direction. You understand? The market has been trending. The red line has been trending, showing you what? That what? Going up. You understand? And we also use moving average to identify what? Market direction, and also determine support and resistance. So this red line now, which is the 100 moving average, is sitting on top of what? Support. Here is support. Why here is resistance? Are you following?
Yes.
Hello.
I follow.
For a day trader's coach, what moving average is advisable?
For a day trader, if you want to the trade, you use lower moving average, which is what? You can use your 50 moving average. You can use what? You can use your 20 moving average, 21 moving average. You can use 8, because we also have smaller moving averages. 8, 10, 20, 50. You understand? That's as a short-term what? As a short-term trader. This one now is for, and you can see that what aligns very, very well. So here now we have what? We had crossover here. The red line, whenever the red line crosses over to the blue line, you can see it clearly. Let me zoom my chart. Can you see it clearly that the red line crossed over this blue line?
Yes, yes.
You understand?
Yes.
So whenever price, or moving average crossed over moving average, that means we have what? We have what we call whenever the smaller moving average crosses over the bigger moving average, we have what you call what? Golden cross, which indicates that what? That the trend is shifting up. So the trend is going up. You can see that the trend went up from here immediately after the cross. Are you following? Is this still making sense?
Yeah.
Oh,
Yes, sir.
is it making sense?
Yes, yes.
Yes, yes.
Okay. Likewise here, what happened here? Who can tell me what happened here? Huh? Who can tell me what happened there?
That's
Across
crossover. Crossover.
another
That
cross.
crossover, the blue line crossed over, right?
Hmm.
No, the red line crossed over.
The red line, let me see. Is it red? Okay, yeah. The red line crossed over, indicating that what? The bulls are still what? Here, are still within the market also. The momentum is still going up because you can see that what? The market from here, you can see what happened from this angle. The market was bullish from here also. This now is a what? Who can tell me what this is based on the market structure that we did? What is this? What is this place called? Fast, who can tell me? Don't make reference to your note. Who can tell me what this means?
The downtrend.
No.
Consolidate. The market is consolidating.
You guys are not practicing. No. Who can tell me what this means? From the market structure that we did.
A reversal.
So nobody can tell me what this thing
That
means.
is a bull flag.
Oh, higher low.
Oh.
That is a trending market.
This is a trending market, and this is a higher low. Market, the trend started from here, and that is the exact spot that what we had our golden cross here. The trend started from here. You understand? And what it formed a higher low here, and you can see that the smaller moving average crossed the higher moving average, which is the blue one, indicating that here is the higher low. Is the higher low for bullish continuation. Are you following? If you fail to enter here, this is another place that you enter. Are you following, guys?
Yes, sir.
People are not getting this moving average explanation.
This moving average, it's too technical.
Confusing. It's kind of complicated and confusing, man.
Complicated, seriously.
It's not complicated. It's not complicated.
Again, we just have to digest it after this lecture. We'll go back to it.
You can see that. See, I want you guys to get this thing now. I am using daily. So when a daily market is a long-term type of market. You understand? If I switch to weekly now, it's long-term market. Are you following?
Yeah.
Yes. Monthly is also what? A long-term market because frames. There are in the higher the number markets. If I'm a short-term trader now, I will not use higher numbers. I will use what? I will use the lesser ones, starting from 50 downwards. Are you following? I'm just breaking it down for you. Then, as a longer term trader, I used 100 and 200. And if you can see here, you can see here clearly. Okay, let me read this thing now so that you will understand it. Let me read this. Let me read. Right, crossovers. Crossover. So you understand this thing that happens here. All these small crossover that happen here. Let me read it. Crossovers. Crossovers are one of the average structure. Are you? Hello.
Yeah.
Okay. Crossovers are one of the main moving average strategy. The first type is a price crossover, which is when the price crosses above or below a moving average to signal a potential change in trend. Crossovers are one of the main moving average strategies. The first type is a price crossover, which is when the price crosses above or below a moving average to signal what? A potential change in trend. Here there was a change in trend from here, from this angle. You understand? There was a change in trend. That's why the red one, which is 100 moving average, which is the lower moving average, crosses over the what? The blue line, which is what? The higher moving average. It crossed over. The trend changed from here and this particular place. So here now, you can see here, we don't have any other twist here. That means the trend is still up. We are still in uptrend. The market is still bullish. Forget about this that happened here. The market is still bullish in my eye. Are you following?
Coach,
Yeah.
is the red one the longer one or the blue one is the longer one?
The blue one is the longer one. The blue one signifies 200 moving up. If I'm looking at the numbers here, look at the numbers here. You can see.
Okay.
The blue one is 200 moving average, while the red one is what? 100 moving average.
Okay, thanks.
So the red one is the shorter one, while the blue one is the longer one. Do you understand?
Yes.
Sorry, just question you on that one. On the first yellow dot there, the blue goes over the red. So
Yeah.
that is that a bearish sign?
No. Look at it very well now. I'm zooming in. Look at it very well here. The red crossed over here. Are you not seeing the twist?
The red was initially on top, and then after that first yellow one, the red was below the blue one.
No.
So it crossed under.
The blue one is under, the red one is on top.
Yes. And then it went below.
No, the red one is on. The
red one is still on top.
Still on top.
Yeah, both crossover, the red one is on top.
Yeah, the red one is on top. The blue line, when the blue line crosses over, it's a dead sign. It's a dead cross.
Dead cross.
So let's continue with the explanation. Another strategy is to apply two moving averages to a chart. You see, here now we apply moving averages. Another strategy is to apply what? 2 moving averages to a chart. One longer, one shorter. You understand? When the shorter term moving average crosses above the longer term moving average, it's a buy signal. That's what happened here. Are you following?
Repeat that again.
I said another strategy is to apply 2 moving averages to a chart. We applied 2 moving averages here, right?
Yes.
Hello.
Yes, listening. Carry on. Another.
Ask your question. So if you are confused, call back, please.
Can
It's
you
very
repeat?
important.
We're saying repeat that another strategy is to do what?
Boss, question.
You
Please,
said
I'm with
apply
you.
please continue on
moving
the other
averages
strategy.
to one
To
chart, one longer,
Someone
one
wants to
short.
ask a question. Someone wants to ask a question. Don't worry, I will repeat myself. Someone wants to ask a question.
Okay, boss, my question goes like this. This is a crossing over. You know, the shorter time this thing 100 crosses the 200. Is it
Yes.
possible that it will cross and go, because it cross, come down, and again, when going up, cross again, going up? Is it possible that it will cross and within this time it will not go up again, it will go under the green one, continue going under the green one to extent before doing this? And again, is the two crossing the same? Because this one goes cross, going down, and this one cross, go up. Are they the same reaction?
No, what you'll be looking out for is the peak of the cross. You understand? The peak of the crosses. Like now, if you look at this one, this one happened here, and we had reaction from here. You understand? We had a bullish reaction immediately that this cross had a bullish reaction. Then here, what happened here is that the blue one was above when these pullbacks, all this correction was happening. You understand? The blue one distanced itself up when this correction was happening. Are you with me?
Yes, I'm following.
So the correction now happened and formed what? A higher low here for another bullish continuation. Like I told you guys when we did market structure that as a trader, if you mix these points, starting point of a trend, you understand? If you miss certain point of a trend, the next place that you wait for an entry is what? Don't enter here again. Don't enter at the higher high. Because if you enter at the higher high, definitely you must be on a serious drawdown. You understand? That you don't know when price will come. And definitely, okay, if you are to enter your trade here, where will you put your stop loss? Yeah? You put your stop loss here.
Higher, yeah.
Which at the end of the day, what will happen? You will be on a drawdown. At the end of the day, you will still hit stop loss. Are you following me? Am I making sense?
Yes.
So if you want to enter your position again, having missed this particular place, having missed this starting point, because this starting point, you are not sure yet. That's why it's not good to enter here. It's dangerous. You can enter and make your money, but it's always dangerous because price can still break down this level. And price can still break down this support here. You understand? Are you following?
Yeah.
So here now, you are not sure of how the trend is going yet. It hasn't given you what? A higher low. Whenever price giving you, as it gives you what? A higher low in an uptrend, that means we have confirmed that buyers are in control, that our trend is what? Uptrend. But if you buy here, there's every possibility that what? Price will get to this point, consolidate, then breaks down again, continue going down. You understand? So here now will be another solid buy entry. Another solid buy entry.
Yeah, following.
There. So, and you can see now below this particular place here, that there is what? There is a twist. There is a golden cross there also, that the red line crosses what? The blue line again, giving you entry number 2. Are you following?
Yes,
Yeah.
yes.
So price now started going up again, flying, and the blue line now distant itself. You can see that blue line distant itself from the red line, indicating that what? That the uptrend move is solid, is very strong. Am I making sense?
Yes, sir.
So right now, the blue line now, the red line now is giving you what? Not only trending, not only that is giving you a clear direction of the market, which is trending market, it also gives you what? Support and resistance, because the red line is pointing at what? At the support level. Price will definitely bounce on top this. So here is our resistance. Here is a support. Are you getting the jack?
Yes.
So here now act as what? Support. You can see that my very solid. My, what is it called? My zone is very, very solid. Price respected 1, 2, 3. It's heading to the 4th one now. So it's a key zone. It's a key zone. So price will touch here and do what? The bulls will start, continue riding the market. So what will happen now is what? Price touches this place. We now wait for, what do we wait for? We wait for a confirmation. We wait for a candle confirmation here. But if price breaks below this red line, that means FTM will go more down. Are you following?
Yes, sir.
If price should break this below here, that means our support is broken. So the next support area now will now be here, which is on top of this 200 moving average. Are you following?
Okay.
Yes.
So this is, then let's continue. I said another strategy is to apply 2 moving average to a chart, 1 longer and 1 shorter. When the shorter term moving average crosses above the lower one, which happened here, 1, 2, when it crosses above, you understand, it gives a buy signal. You can see that what? Here gave us buy signal. Here also gave us what? Buy signal. Are you with me?
Yes.
So when the shorter term moving average crosses above the longer term moving average, it gives a buy signal, as it indicates what? That the trend is shifting up. Here, trend was what? Shifting up. As in trend, we had an uptrend from here. Our job. This is known as golden cross. You can highlight that, golden cross. So this is an example of what? Golden cross. Meanwhile, when the shorter term moving average is below the longer term, you understand? When this red line now is now below, and the moving average the blue line crosses over the red one is below. Now you can see that the blue one is what? Below. You understand? Why the red one is above? The red one is 100 moving average, is above the blue one. That means the price is what? Trending up. But when this red one is below the blue one and the blue one crossed over and stayed up, that means the market is what? Bearish. The market is trending down. Are you following?
Okay. Yes. Yes.
So meanwhile, when the shorter term moving average crosses below the longer one, the longer term moving average, it is a sell signal, as indicates what? That the trend is shifting down. That means we are in a downtrend. Are you following? And this is known as death cross. Gold cross is bullish, is what? Bearish. Any question? Any question?
No, for now, no.
Yes, please, coach.
Okay.
Can you hear me? Coach?
Yes.
Okay. Please, now looking at this FTM now, where the last place that this red line now is right now, is it a very good entry?
It's a very good entry. It's a very good buy entry. You understand? But you will not use only moving average to gather your buy emphasis now. So you will not emphasize on only that red moving average. You understand?
Yes.
What you will do is that you can see that I've already drawn my supply and demand zone there. Have you seen it? I've drawn my zone. And if I should place my trend line there now, you can see that what? This red trend line. Have you seen that my trend line is also pointing down side? Eh?
Yes.
Are you with me? Here we had first touch, we had second touch. So let's see if you can have what? The third touch.
Third touch.
Definitely the third touch will be sharp. It will break above here. It will break above this trend and touch it and enter back again. Are you with me?
Yes.
Yes.
So not only that, this thing respected the trend. So the market is still trending up. Forget about this thing that is happening here. It will still trend up. But if price breaks this below trend line here, breaks this line here, break this support level here, then we are now what? Heading towards confirmed bearish market. Are you following?
Yes.
Yeah.
Yes, sir.
So for the market is still bullish until we break below this support, or until this support is broken. The support will do what? We break. Something like this will happen. Something like this will happen. Sharply happen and do what? It will now retest this place. Here will now be what? Resist support, turn resistance, and do what? Bam! Price will now do what? Hit here. Are you following? You see how I'm interpreting my charts? And the same way I'm interpreting it is still what is happening. Price is still going down, going down. So price action is good. It's good to know your technical analysis. If you know your technical analysis, you predict what will happen.
We'll get there.
This thing is sweet.
Yeah.
I spent the first money I spent was $1,000 to learn this. I spent $1,000. I paid 100,000 and I paid 40,000 naira to learn this. So you guys are, should I say you are lucky to learn this with how much one? That was why some people were shouting that it's expensive. I was just looking at you people, that said it's expensive. 25,000 naira is expensive to learn this. Even what we bought was a pre-recorded video. You understand? Video, you know. But now we are teaching you guys live like this, showing you on chat how it's working, how is it doing, you know. You guys are lucky.
We appreciate.
We are not
What
lucky,
you-
we are blessed.
You guys are. So what you would do is just to put in the work. I have a guy. You know, we all are students anyway. The previous set, you know. I have this guy because when we were doing this technical analysis, I was contributing a lot because I've had all this true forest experience and all that. So I'm very good at this technical analysis. So I was contributing a lot to the class. So Mr. Raf now picked me to be one of his mentor. You understand? And there's another guy there that was, you know, that was messaging me, you know, wanted me to put more on this for him. So I now decided, okay, to, you know, help the guy out. Now the guy is interpreting, even he has gone far. He's now thinking, you know, he's now bringing institution level, other blocks and all that, you know. He's very good. He's now on his own. You understand? So put in the work, practice. You practice it, you will know all these things. You will know all these things. Dedicate time for my chats. If I'm on the go, I have PDFs. I will use my cell phone to read. So it's very, very good. So let's continue. So hope you guys understood this analogy.
Yes, coach.
Okay.
Yes, sir.
I said all these things that happens here, the yellow line, they are what? They are golden crosses. Golden crosses. It will be very difficult to spot a death cross because market is trending up. Okay, let's check BTC. Let's check BTC.
Hi. Bali Boyale.
Yeah, Biko.
Those are thanks.
BTC, if BTC break this below this 100 moving average, it's going down to 44, 45. Yeah.
40. Good.
I'm
Hey.
telling you.
My God.
Coach, can I ask you something?
Okay.
Just in case that BTC goes below 40, does it mean that the blue line will go now above the red?
Yeah, you will see the moving average will be stretching. It will be stretching itself. You understand? It will be stretching itself until it's cross. You understand? So right now, what is holding this BTC now is 100 moving average. Is holding it. It's holding it for not to fall.
Sure.
BTC should not fall, though, please.
So many liquidations, so you should not beg.
Okay, if you see here now, if you notice here,
I was not trying to beg.
the cross happened here also. The golden cross happened here. I'm looking for the bearish cross. I'm not seeing the bearish cross. So That's the death cross. I'm looking at this one. See this one. The blue line is above. Here. The blue line is above the red line. That's an death cross. The blue line is above the red line.
Yes.
While the red line is below. Are you following?
Yes, sir.
Hello.
Yes.
Yes,
Following.
This is a death cross now. The blue line is above. From our statement, the blue line is above.
Yes.
We said,
Yes.
when the shorter is below, you see the shorter time is below
Yes.
the longer term. That means we have what? A death cross here. And what happened? Bearish. Market started what? Trending down. Yeah?
Okay.
Let's identify another one. Here, we now had what? Golden cross. Yeah? Here, we had what? Death cross. Okay, if you see this thing now, this thing is supposed to happen on top here. On top. You understand? But it didn't happen on top here. It now happened here. So being a price action trader, you trade with your naked eye. You can enter your sell here. But indicator will lag. That's what I mean by indicator lagging. Did you see where comes this red crosses? Are you following,
Yes.
guys? Are you following?
Yes.
Are you reading
Yes,
through
we are.
all this, the statement that I made? I said
Yes, sir.
indicator lags so much. Did you see where price started what? Giving you sell signal here, here. Why the sell signal started from here? The sell signal started from here. Are you following? The sell started from this rejection here. Anywhere you see rejection, rejection is powerful. You see it here, there's a rejection here. What happened? Price started dumping. Are you following? Rejection is very, very solid. Yeah, don't joke with rejection. So why is it that price didn't give you signal here, but it gave you a signal here? That means indicator lags so much. Me now, being a naked eye trader, I will enter my sell here. Are you with me? So before indicator will give you sell order or sell signal, I've already enjoyed what? Some profit here. So if you are to take like 100% profit here now, 100%, I've already started taking like 20. Am I making sense?
Yes.
Yes. Yeah.
Okay. So that's the reason why I said indicator lags so much. See another golden cross. So whenever you see a golden cross, the blue line will be under, the red line will be above. So the market is still bullish until we get to this point. Any question? Any question? Any question?
No, please.
Okay. Let's now go to the smaller ones. Let's now go to the smaller ones.
Gala.
Gala.
Yes.
I should check Gala.
Yes, that's Ralph's favorite
Yes,
coin.
please.
Please. Gala.
Gala. Gala, where's the Coke that we used to drink the gala now? Where's the gala charts? I'm looking for the gala.
Oh, please, when is ninth class ending?
It's supposed to
You're
end,
not saying gala, you choose manna.
but you guys, I really want you guys to
We are
understand
still
this.
enjoying.
Supposed to have ended, but
We still
you
like
guys
it.
are still
Gala
enjoying.
Gala is scarce.
Prof,
So-
I'll take my exit soon because when I start for too long and I don't get anything, I may never get anything. So I'll probably go and watch the video later to understand better or go do some more research because sincerely, right now my head is so blocked up.
It's up to you.
Same, man. It's been too long, man. It's really.
Okay, maybe we can call it a day here.
Yes.
Next time we do. We'll continue. No, not tomorrow. Monday. We'll continue with the smaller ones.
Yes.
Like 28, 8, 20, 21, 50. So any questions? So we can stop here. I really want us to do this moving average. Thank God we were quick. So the next one now is just to do the smaller ones. Then we'll now go to how to create trading plan. That one will help you a lot.
What of Fibonacci, coach?
I've done Fibonacci now.
Yes.
I've done Fibonacci.
Okay.
So you can stop recording. Oh. Who is recording? You can stop recording.
Please, that was
You can stop
Fibonacci.